Good afternoon, everyone, and happy Friday. What a week it has been in the markets, that is for sure. We saw so much volatility yesterday with a major sell-off in tech, and it looked as though the market was going to continue that trade today, and it was softer at the open, but we certainly saw a real rebound. In other words, investors really buying into that dip. We actually saw the Dow up by close to 2%, the S&P up by close to 2%, NASDAQ recouping some of yesterday's losses. TSX also faring quite well today, up by about 1.4%, leading the markets to have a pretty good week. So, despite the fact that we've got the big concern out there that the U.S. 10-year yield is rising too fast, that investors believe that the Fed doesn't have a hold on the rising rate environment, that we will see inflation. That seemed to be put at bay a little bit towards the end of the day today, and investors went back into buying the dip mode, which has really been the strategy that has worked over the past, since the financial crisis. So that was actually back in vogue as we ended this week today, and so we really saw some nice performance. Now, at the end of the day, that the trade continues to be to own those value cyclical areas of the market, like energy, like financials. WTI continued to move very strongly to the upside, breaking through that $65 mark. Of course, the big news this week is that OPEC Plus did not change their production levels. Also, of course, this week and today in particular, big jobs numbers south of the border beating expectations. So it looks as though the economic recovery is taking hold there. Add into the mix, of course, expectations for a very large stimulus package south of the border. It looks like that actually might come to fruition in terms of getting played out here. So taken together, you saw investors want to continue to buy the market and really put those concerns a little bit, at least, to the sidelines today about that U.S. 10-year yield and not having control over the inflation picture. Do catch my interview with Barry Allen today if you want to get his thoughts in terms of what his inflation outlook is. He actually agrees with the U.S. Federal Reserve in the sense that we might see some transitory inflation, but that COVID and aging demographics is very deflationary, meaning that if you actually, roll this out maybe 8 months or so, we won't have those inflation concerns in the marketplace. So just take a look at that at Catherine Murray Media and Markets on my YouTube channel if you want to see that. And then also, when we just take a look at the Canadian market today, we did see some nice strength. Again, obviously, our energy sector has been very much helped by the price of WTI. Our energy sector here in Canada up by about 10% on the week alone. Also, some nice strength in financials, up by 4.2%. Industrials also doing well on a weekly basis. Today, in particular, rails were up by about 3%. Some of the telecom companies were up strongly as well. Morgan Stanley upgraded BCE as well as the price targets on Rogers as well as TELUS. So Rogers was up by 4%. Shaw was up by 4%. Some of the energy names, the big majors, the seniors, Cenovus up by 4%. So some interesting moves here in the market for sure. From a Canadian headline perspective, I would just point out that Health Canada did approve J&J's vaccine, and we also have news that we can expect an extra 3.5 million doses of Pfizer's vaccine ahead of schedule. Rounding out the picture, though, for the Canadian market, Canadian GDP did come in above expectations, 9.6 versus 7.5% on an annualized basis. And we also saw February home sales in Vancouver as well as Toronto continue to hit new records. So taken all together, it seems as though the concerns from yesterday really weighing on the market were alleviated, and we continue to get confirmation of positive news surrounding the vaccines and also the broader economy. But we'll see what next week brings. Certainly much more to come. We'll leave it there. Have a great, safe, fun weekend, and we'll see you next week.